Just how bad is the outlook for jobs? Our next guest should be able to tell us. He's Neil Owen, Global Head of Financial Services, and Robert Half, International Recruitment Specialist.
Morning.
Good morning. Thanks so much for joining us today.
How bad's it going to be?
Well, clearly, there's a lot of press coverage at the moment. There's a lot of doom and gloom in the press, especially Q4, a lot of redundancies in the investment banking sector. But it's not all bad news. Robert Half conducted some research in Q4 at the back end of last year, and a net 69% of finance leaders plan to increase the levels of finance and accounting staff within their companies. So
That's pretty incredible.
Yeah, it's not all bad news.
Who specifically says they're going to hire?
Well, it's mainly, a lot of the cuts have been in the large bulge bracket investment banks. We're still seeing a demand, certainly within some of the hedge funds, some of the fund-of-fund companies, and certainly some of the sort of smaller boutique investment banks. There's still some levels of hiring.
What about the whole bonus issue, Neil? Deferred bonuses, bonuses offered in shares. How has that affected the whole employment landscape?
Yeah, there's a fairly significant effect there. Traditionally, Q1 saw large cash bonuses paid. And there'd be a big merry-go-round of people leaving and joining companies at the back end of Q1. Last year, we saw a lot more bonuses paid in stock and or deferred compensation, and that meant there wasn't such a sort of steep movement in recruitment around the March-April time, and it was a little bit more steady throughout the summer months.
But surely in these difficult times and within the volatility in financial markets, even if you don't get a fantastic bonus, you're wary of the surroundings, the economic reality. So is the rationale, oh, my bonus wasn't great, I'm going to look for another job? Will that other job exist elsewhere?
Yeah, certainly. I think the expectations for bonuses this year are probably not as high as last year, and so people will have that in the back of their mind, maybe tempted to move before it's announced.
But can they move? Can they move when some people are predicting, for example, banking analyst Dick Beauvais in the States, 150,000 more job cuts in the banking industry on top of last year's?
There is still demand, and a lot of the time it will come down to the specific skills that you have. There's still hiring in and around regulatory reporting,
risk compliance, things like that.
Absolutely.
So just tell us what jobs, what are the profile of the employees that are going to be most marketable in 2012?
Yeah, certainly candidates with experience within regulatory compliance and risk. Another key factor really is the commerciality of the candidate, the ability to be able to add value. If you can save money, if you can save resource, if you can save time, you're going to be of value to future employers.
What does that mean? That you're more experienced? How do you make yourself a cost-effective employee?
Well, it's really about driving efficiencies within the banking sector. So where you've been able to prove that you've had experience of driving efficiency, driving change, improving processes and systems within the bank.
There you go. To do your CV, you need to emphasise your cost efficiency.
But is the talent pool out there? I mean, you're ever exposed to it. Is this type of employee, because the financial services industry it's ever evolving, isn't it?
Absolutely. It is changing all the time. So, for instance, when we talk about the regulatory and compliance changes, a lot of the regulations that are coming in, candidates don't have the experience of those regulations because they've never been implemented before. So yeah, the war for there's been a war for talent for some time, and highly skilled candidates are always still in demand.
All right, we're going to have to leave it there. Thanks very much, Neil Owen from Robert Half International.